What are the best investing strategies during a crypto bear market? In this video, I'm going to explain to you 7 different strategies that I think are the best strategies for accumulating wealth during a crypto bear market. As you know, a crypto bear market is the ideal time to be accumulating, and this is really the time when millionaires and wealth is actually created, not during an actual bull market. And I'm going to prove that to you in just a second. Now, this was also, for me, I happened to start dollar cost averaging into the market basically around the halving, which was around like May 11th, I believe. So I started dollar cost averaging here around when Bitcoin was like at $5,000 or so. And I did the same thing at the same time with Ethereum. When Ethereum, I believe it was like $200 to $300 to $400 when I started dollar cost averaging. And because I used the 7 strategies that I'm going to explain to you in this video, this had allowed me to make a small fortune throughout this last cycle of the cryptocurrency market. And the best thing about this is that you can think of a bear market as something that's really scary that you lost a lot of money on, or you could realize this is the time where you're really going to set yourself up for the future. So let's get in and let's talk about the 7 different strategies to use during a bear market. Now, with that being said, before we go in and talk about the individual strategies, it's important to you to understand the anatomy of a bull and bear cycle, so that way you can know when we should actually start applying these strategies. So a couple things is we can look at history, and throughout Bitcoin's history, we've gone through these major boom and bust cycles. You can see here we rode it all the way up to 20,000, and then we had like an 83% drawdown that happened in this previous cycle. Now, I'm not saying that that's going to happen this time around, but it's something that you should just at least be prepared for. And if that happens, then we could be sinking all the way down, right, to $12,000 or so, which I'm not saying that that's going to happen by any means, but this is the idea, right? We go through these massive upswings and then these massive, nasty, long bear markets. Now, why does this actually happen? Well, this happens because the market is still young and there's a lot of volatility still in the markets. And I expect over time that as the market becomes more mature and more stable, money gets into the market, then these boom and bust cycles are going to become less and less. But it's important that you understand this sheet. If you haven't seen this before, I talk about this a lot. I talk about how the market is made up of human beings. Human beings are emotional creatures, and that's why the market goes in these emotional cycles, right? Earlier in the year, we're talking about, belief. It's time to fully get invested. Thrill, euphoria. I'm a genius. We're all going to get rich. And now people are like, shit, everyone is selling. I need to get out. And I'm getting out. I can't afford to lose any more money in the markets. And who shorted the market? Why did the government allow this to happen? Da, 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 right? We've kind of gone through this psychology of a market. And if we look at this, are we closer to the top or to the bottom? I'd likely say that we're closer to the bottom, right? And just by using the sentiment of how you're feeling or how people that are invested in cryptocurrencies feeling, you can get an idea of where we're at in this market cycle. Now, with that being said, a bear market, again, this is the time to be accumulating. Even though there's a lot of uncertainty in the market and there's a lot of fear in the market, this is really the time that you want to be stacking chips. And we're going to be talking about which chips you should actually be stacking. And the reality is that life works in seasons, right? And, just like if you look at night and day, after night becomes daytime, after winter becomes summertime, or springtime. And the market moves in cycles like this also. So after a bear market comes another bull market. After a bull market comes another bear market. And after a bear market comes another bull market. So you have to realize that this is the way that the markets are going to continue to work. And really, if you use the 7 strategies that I'm about to discuss, this is where you can become a crypto millionaire. And you have to realize a couple things. Number one, that crypto is like the .com investing era. Like this is where all the people that made all the money in the .com era that happened, it's like a second chance for us. These crypto companies are going to be some of the biggest companies in the future of the world, and you have the ability to invest at early times. And as you probably have seen by now, fiat money is really a failing experiment that is continuing to rob from the poor and middle class and to make the rich ultra wealthy. And it's also just a completely failed experiment. If you look at the Great British Pound, the most successful fiat currency of all time, it's been around for over 300 years. It's lost 99.5% of its value. So there needs to be a new money system, and that's what crypto is providing. Okay, so what are these 7 strategies that we should be focusing on during a bear market? Okay, so the first one is pretty obvious, and we'll go from kind of more obvious to more complex strategies as we move down the list. So first things first is the first thing you should be doing during a bear market is really focusing in on increasing your active income. What is your active income? That's money that you may be earning from a job, or that's money that you're earning from a commission sort of role, or you're earning from some sort of business that you own. But this is key. During a bear market, you want to increase the amount of money that you're earning, and you should always be doing this. Investing should always be secondary to whatever your primary income source is, or your primary business is. That should always be first, and that should also always be the first thing that you invest in, likely because that's the thing that you're going to get the highest return on. You also have the most control on. So I know while that's not maybe what you wanted to hear, it's the reality. And if you're able to earn more money during this time period, and say you invest 5 or 10% of your paycheck, well, you're able to invest a higher amount because your paycheck is now larger. So first thing, increase your active income. Second thing is increase your passive income. And there's a few ways that you can actually do this. One of the ways that you can really easily increase your passive income is by signing up for a crypto credit card. So you probably use credit cards every month, and by simply signing up for a crypto rewards credit card like Gemini or SoFi, or the Upgrade Bitcoin rewards credit card, you can earn 1 to 3% rewards in cryptocurrency, which is really great, because if we expect Bitcoin to one day be a $100,000 asset, really, let's say that you're earning 2%. So really that's like, a $20,000 asset becomes a $100,000 asset, right? That's a 5x. So it's really like you're not earning 2% cash rewards back. You're actually earning like 10% cash rewards back, right? And if it becomes a $500,000 asset, do the math on that, right? So one thing that you can really easily do is just start spending money on these different credit cards, and you'll get a higher return likely, right? Because we expect Bitcoin and cryptocurrencies to regain all-time highs, at least most of them, right? Or not most of them probably will not, but we expect Bitcoin and some of the major cryptocurrencies to return to all-time highs, right? So that's a really easy way that you can increase your passive income. Another way that you can increase your passive income is through staking. You can come to a website like stakingrewards.com, and you can simply search for your crypto asset, and you'll be able to see the best place to actually go and stake your asset. This is really important because now you're actually earning interest on these assets. And because most crypto assets actually are inflationary in nature for the most part, even Bitcoin, right? There's more supply coming on to the Bitcoin market, even though it's becoming less and less. Most tokens are inflationary, so being able to earn some sort of yield on your coins that you own is a great idea, because when things do turn around and price starts increasing again, you actually have more assets or you have more of that asset to actually increase in value. The next thing that you can do is you can actually lend your cryptocurrency. So there's a lot of different applications like Aave.com, for example, that you can come to, and you can actually lend your money out. You can also do this on your centralized broker. A lot of them allow this. I know KuCoin, for example, Binance. You can lend your crypto out to other people that are wanting to trade with it. And you can do the same thing here on Aave and some of the other money markets that are available in the cryptocurrency space. Another thing that you can do is use your affiliate links, right? If you sign up with a broker, a lot of the times they do have an affiliate link. You can start using that if you're introducing new people to crypto or whatever. If you refer people, a lot of the times you can get paid passive income anytime that they're making some sort of trade. So that's the second thing, is to increase your passive income. The third thing has to do something with indexes. And this was really the recipe for success in stock investing throughout time, pretty much. If you look at indexes, they're basically just a conglomerate of different assets. For example, if you look at the S&P 500, it's like the 500 best companies in America, right? And you're betting on this index index, and you're getting a diversified portfolio in this sense. So I really like investing in indexes as a safe way to get into the market, especially during a bear market, because you're not trying to pick individual coins or different individual projects, and it's a safer way to do it. It's a proven way to invest with the success is using indexes. Now, one index that I actually like is something called GLP. You can buy it on gmx.io. Basically what it is it's an index of Bitcoin, Ethereum, Avalanche, and stablecoin. So it's like 15% Bitcoin, 15% Ethereum, 15% Avalanche, and 55% stablecoins. And all you have to do is buy the GLP token. And the cool part about this is that not only are you getting exposure to some of the safer assets in the space, which is ideal for accumulating during a bear market, but with this one in particular, also earning a 30% yield that's paid to you in the AVAX token majority, which I think is really, really good. And I've done other videos on my channel about GLP and gmx.io, so feel free to check those out if you want to understand exactly how this platform works and get a tutorial on how to set it up. Another index that I really like that I think is maybe a little bit safer is on curve.fi. It's called the A-Try crypto pool. Basically, you're buying DAI, USDC, USDT, Bitcoin, and Ethereum, and you can earn basically like 10% APY on your assets. I think it's a great way, a safe way to dollar cost average into the market. Curve is obviously one of the largest platforms in all of crypto, so I think this is another great index that I really like. So strategy number 4 is dollar cost averaging, right? And you could dollar cost average into A-Try crypto or something like GLP or some sort of index. And you could also just dollar cost average into something like Bitcoin or Ethereum, but I'll show you why it's so powerful, especially during a bear market. So if we take a look at the bear market, which was basically from January of 2018 till September of 2020, and if we just say that we were to dollar cost average and every day we were to buy just $10 worth of Bitcoin during this period, during this time period, we would have invested about $10,000, okay? And this is pretty realistic, right? $10 a day, maybe you can invest $300 throughout the course of the month. And at this point, we would have accumulated 1.42 Bitcoin, okay? And if we take 1.42 Bitcoin and we multiply it by $20,000, we get $28,000. So your $10,000 investment became $28,400. Now, if your 1.42 Bitcoin that you invested at the top of the market when Bitcoin was like $60,000, that $10,000 investment would have been $85,200, right? Or a little bit more than that. And so the power is when you dollar cost average during a bear market specifically, you're getting these assets at a cheaper price. And again, this has just been one of the most proven investing strategies of all time. You've probably heard of this before, but it's very important to do it on a consistent basis. So what I think is a great idea is using your centralized exchange, whether it's Binance or you're using Coinbase or whatever you may be using. And a lot of these platforms, you can actually just set an interval and a dollar amount that you're going to automatically invest. So it'll automatically withdraw it from your bank account. And this is a really, really powerful way to dollar cost average into the market without ever having to think about this. I highly suggest, setting this up. Obviously, I'm not your financial advisor. This is not financial advice, but this is something that I think is a really smart idea to do. It doesn't take any thinking after you set it up, and you're doing something that I think you're going to thank yourself later on. Okay, so strategy number 5 is getting into stablecoin farms, right? And the idea is, right, during a bear market, obviously, we want to dollar cost average into blue chip assets like Bitcoin and Ethereum, but also the chances are you probably have a decent amount of stable coins, hopefully, that are just lying around. And one thing that I love to do is to farm with these stable coins. And if you're not really familiar with how DeFi or yield farming actually works, I put together a mini course. It's a 4-part video series. You can get through it in like an hour and learn everything that you need to know about yield farming. If you just come to Instagram and follow us, Blue Edge Crypto, and you DM us the word DeFi, I'll automatically send you a message with links to that course. It's absolutely 100% free. So if you want to know all of our strategies and whatnot and how we think about this, then go to Blue Edge Crypto and DM us the word DeFi. So back to what I was talking about. One of the things that I really like doing is stablecoin farming. So for example, you can come to a website like coindix.com and you can click on stablecoins and you can sort by APY if you'd like to, and you can see what the different opportunities are like. Okay, you can also come here and sort by TVL, which is going to give you, this is kind of like a safer thing, but you can see here, I can earn 9% on my USDC. You can see you can earn 38% on your USDC here via the Waves network on Vyers. And you can see a bunch of other opportunities here, and you can figure out which one you think is the most attractive. But all in all, I love stablecoin yield farming, so that way my assets are working for me. I also like this because I'm able to earn some income without having to take directional exposure to the market. So even if prices start tanking harder and harder, I don't really care because stablecoins, right, they're pegged 1 to 1 of the dollar. So it shouldn't matter if the market moves up or down. You should just be able to still earn this steady yield. The sixth strategy that I like to employ during a bear market is delta neutral strategies. And this may be a little bit more complex if you haven't heard of this, but I'll do my best to explain it. Delta neutral basically means that we want to take both a buy and a sell position at the same time. So that way we don't care if the market moves up or if the market moves down. It doesn't matter to us because we're exposed both directions. If the market moves up, we'll be making money on our long position, but we'll be losing on our short position. So that way they will balance each other out, right? And if the market moves down, we'll make money on our short position and we will lose money on our long position. But again, they'll balance each other out. And this is the idea behind being delta neutral, which I think is a powerful strategy, especially during a bear market when maybe you're not fully ready to say that, hey, the market's turning around and we're going back into a bull market. So with that being said, let me put this into example for you. Let's just say, for example, you want to earn yield on your Ethereum, or you have some sort of Ethereum farm or option or whatnot. And let's just say, for example, I see this opportunity. I can earn 37% on my Ethereum. This is obviously wrapped Ethereum, same thing, right? But I can earn 37%, but I'm not that confident that Ethereum is going to increase in price. So what you can do is basically you can get into this play, right? And then you can also open up a short position on like KuCoin, for example, or Binance. You can do this likely on your centralized exchange. I use KuCoin, for example, at least when I'm doing any sort of trading, but it works on any brokerage or exchange that you want to use. But here's the idea, right? Let's say we buy 1 Ethereum worth and we're earning 37%, and then we're short 1 Ethereum worth. Okay, that means it doesn't matter if ETH goes up or down. It doesn't matter. We just earn 37%, right? So we're earning this yield and we don't have any direction bias in the market, which is a really good thing to do during a bear market. And number 7, my favorite always investing strategy is to invest time into yourself and into your own education. There's nothing more powerful that you could be doing during this bear market is investing and understanding how crypto works better, understanding how markets move better. This is always going to be the best return on investment that you can possibly make because nobody can take the knowledge or information or experience that you get from yourself. And if you're looking to further your education and you're looking to get better at crypto trading and investing, then you may want to consider becoming a member at blueedgefinancial.com/crypto. We basically give you everything that you need to know. You'll see all of the farms that we're in, all of the strategies, our portfolio, our algorithm, all the trades that we're getting into, all of this. And you're going to be led by my partner, Lee, who's basically been in Bitcoin since it was 1 penny. So if this video is helpful, please go ahead and like and subscribe, turn on the post notifications, and we'll see you in the next video.